Hey everyone, welcome back to the Hampton Roads Real Estate Network. I am joined again with Deanna Ashton with AFN. How you doing, Deanna?
I'm good. How are you?
I'm doing great. I'm super excited for spring. It's rolling in out here. The flowers are blooming. The birds are out. I love this time of year.
Yes, me too. And it's a great time to have these conversations because it's a really busy time for potential home buyers, especially our military home buyers.
Yeah, absolutely. People are starting to think about where they're going to be moving. School's going to be ending in a couple of months. So we're about to hit prime moving, buying, and selling season. So we're all getting geared up. And this topic today is one of my favorite topics, not because I've done it before, but because I haven't done it before. It was one of my biggest regrets when me and my wife lived in Lynchburg. We never did house hacking, and it was the perfect time to do it. It was a really low cost market out there in Lynchburg, and there was plenty of duplexes. We actually lived in a quadplex while we're out there. And we were young and living in apartments and rentals anyways. So it would have really been no thing to do this ourselves. So house hacking, one of the biggest things that I regret not doing. So for that reason, whenever I meet somebody who wants to do this, I get really excited because I think it's an awesome thing to do, especially when you're young. There's all types of multifamilies and all different types of ways that you can do that. So anybody who's willing to do this, I get really excited to help.
Yes, definitely. And I know you have a lot of great things to review about this area that just makes it a unique area to do this because we also always have people moving in and out and they're sometimes coming for just a few months for schools or things like that.
Mm.
So there's opportunity there to find renters a little bit more easily too.
Yeah, absolutely. I couldn't agree more. This is a perfect area to do this type of house hacking. And we're going to be talking, of course, about VA loans and how that works. So we're going to get into that with you about how you can use your VA loan to do this. But I wanted to start off with talking a little bit with people about what you can buy out here. What does the multifamily market look like out here in the seven cities? And the good news is that there's these types of units in all seven cities. If you look at Hampton, Newport News, Chesapeake, Portsmouth, Virginia Beach, Suffolk, it doesn't matter. There's these types of homes out there no matter where you look. And the price ranges are going to vary greatly depending on those locations, but you can expect to pay around the median is 322,000. So very affordable, really the cost of a single family home in a lot of cases. They get up to as high as 1.5 million. I don't expect many people to really be looking to buy that type of multifamily, but those are down by the ocean front. Some of them are literally on the ocean log. So we're really not going to talk about those. And they get as low as 149,000 for some of your smaller duplexes. Of course, some of those might be fixer uppers, and we'll talk a little bit about that with you and how that works with a VA loan, because I'm sure that there's qualifications in regards to the house and the condition that you'll have to consider. So, but you're going to be looking in the 300 to 400 range for a lot of these, which again, that's the cost of a house, and you get a little bit of an additional flexibility with having a multifamily and a discount on your mortgage potentially. So, in this area, we see mostly duplexes. You have some triplexes, which are really odd ducks. Triplexes are kind of strange. Usually it's some kind of like small apartment, like attached to a duplex or something odd. So you have triplexes and then you have a small amount of quadplexes too, which are usually buildings that are designed to be multifamily. Quadplexes are usually built to be that. But by and large, you're going to have duplexes out here. Currently, right now, as we're speaking, there's 56 active multifamilies in all of the seven cities here in Hampton Roads. So a decent
Wow.
amount of choices. Yeah. And the vast majority of those are duplexes. 42 of the 56 are duplexes. So you're most likely going to be looking to buy a multifamily with just one additional living space. That's okay. Because even amongst duplexes, there's a lot of variety in how
Mhm.
they're laid out. And one important thing to note also about multifamilies in this area is the age of the building is going to be heavily skewed towards being older. The vast majority of these duplexes weren't built to be duplexes. They were built to be single family homes and they were converted into duplexes. And that's fairly common in this area. You'll see a lot of these older colonial style homes, especially in Norfolk. A lot of them are very similar. They're homes built in the early 19th century. And over the years, somebody got the idea to split it or divide it up in a way that it becomes a multifamily home. And it just had been that forever. Okay. So, for example, as far as the numbers we're talking about here, there's only one currently active multifamily that was built past the year 2000. So,
Wow.
yeah, nine of them were built after 1980. So, only 10 out of the 56 were built past 1980. And I was born in 1985. That wasn't that that was pretty long ago. So we're
Yeah.
not talking about a young building anymore, right? So that's 40 plus years ago at the minimum for a lot of these buildings. And those are the young ones. Okay. We have four on the market today that were built between 1960 and 1980. And then you start seeing the majority of them were built before that. So 13 were built from 1940 to 1959. 26 of them were from 1900 to 1930. So
Wow.
our biggest category is from the literal 19th century,
Yeah.
to before the World War II era. So those are some old buildings. And we even have one that was built from 1799 to 1899. And two that were technically built before 1789. So
Wow.
we're talking serious pieces of American history at this point.
Yeah, that's awesome. And I think a lot of people, when they see those dates, they might be hesitant because they're thinking like, oh, it's going to be an old rundown house. And there maybe once that or that way. But I've had clients buy duplexes in Hampton Roads where they have been completely redone or redone more than once over. Because, like you said, a lot of those homes may have been a single family home and recently converted into a duplex or a multifamily home. So, don't let the dates discourage you until you're able to kind of see pictures or possibly check the house out if you're looking to use your VA loan to, purchase one of these.
Yeah, absolutely. In fact, one of my favorite things to see in this area are old historic homes that have been recently updated. As you know, I
Mhm.
recently had an open house at one of these homes. It was built in 1920. It was actually a duplex that was converted back to a single family home. And
Oh, wow.
the renovators did a beautiful job. And if anybody watching wants to check that out, just drop a comment below and I will send you the link and you can check that house out. It's really, really cool. So yeah, there's a lot of that kind of stuff in this area. Norfolk, especially, very old city, lots of old homes. And so you see a lot of this creative stuff happening out there, whether it's converted to duplexes or converting them back to single family homes, and a lot of renovations going out there. So that's kind of a snapshot of what you would be possibly looking for if you live in this area and you want a multifamily, or of course, if you're moving into this area and this idea of house hacking appeals to you and you feel like you're in a situation to do that, you could get a significant discount on your mortgage by having a rentable unit attached to your house. And in this area, as you mentioned before, it's a great area to do this because there's just a never ending need for rentals in this area.
Mhm.
There's so much influx between the military and the shipyard, and there's always construction. So you have temporary construction crews coming in and doing things. So there's a lot of, yeah, temporary and semi permanent people coming in and out of the population. So there's always a demand for rentals, and if you have one attached to your house, then it's super convenient for you to be able to find a tenant. And we'll get a little bit into how that works and some tips for managing that a little bit later in the video. So stay tuned to the end for some pro tips on how to do all that kind of stuff. But as far as looking to fill that rental unit and what you can get, which is essentially a discount on your mortgage, most of your units are going to be a two bedroom, one bath situation in a duplex. around 1,000 square feet. And right now, the median rent for that is $1,300 a month. And your average is going to actually be a little bit higher. It's around $1,500 a month. So imagine getting 13 or $1,500 off of your mortgage because you get to
Yeah.
rent out a unit.
And I think about it going back to you talking about that average price of 200,000 or $300,000, you're talking about possibly getting almost half or more than half of your mortgage covered with that rent. So it's important
Mhm.
to kind of keep that perspective. If you're looking for a multi-unit and you're looking at that mortgage, to also think about the prospective rent that you're going to be getting. And again, that's an average. So depending on where it's located, condition of the house, all that stuff can be different.
Of course. Yes. Great point. And you could even get most of your mortgage covered if you really wanted
Yeah.
to. Or you could live in a large part of the house and just get a little bit of it covered because some of these duplexes are actually unevenly split. I
Yeah.
would say most of them are pretty evenly split. That's the most common layout. But some of them just have like little baby units, basically, just a one bedroom, one bath kind of thing attached to them, maybe on the upstairs portion or maybe an addition off to the side or something like that. We'll discuss a little bit about layouts later on in the episode here. But so if you are going to rent out a little 500 square foot unit, which is that's those are real units out there. This is real numbers. You can rent it out for $750 a month. And so we're talking about a little baby area in your room. Basically, it's just a room, right?
Yeah.
And you can rent it out for $750. So that's a decent discount off of your mortgage just for renting out a small space in your duplex.
Yeah. I mean, there's so many advantages to being able to have the VA loan and do this that make it a lot easier than if you don't have that entitlement, to do the same thing. So I'm
Yeah.
excited to kind of get into it.
Yeah. I think this is a good segue to go ahead and move into the mortgage side of things. One thing I do want to clarify before we go in there that we didn't really define. A residential multifamily is 4 units or less. So you can't use a residential loan or a primary residence loan to buy anything more than that. That is technically a commercial building. So anything that has
Yes.
5 or more units is a commercial purchase. And those work a lot differently, right?
Yes. So when you're looking at using your VA loan, like you said in other videos, you're going to think about it as more of like a bank. And the VA loan doesn't have a max if you're using it for your first time. And that's why I think it's important that you pointed out, a lot of people when they're first getting started have the advantage of using their VA loan for this. There are opportunities to do this with FHA loans, but with the VA loan, there is no down payment required still. So that really is a huge advantage. You're able to not go with that down payment and you're able to still qualify for 1 to 4 units. Now, the caveat is just like with every time you're using your VA loan benefits to buy a new house, it has to be your primary residence. So if you're active duty, they're going to look at your orders. When are you transferring there? At closing, you're still signing that intent to occupy the home as your primary residence. And if you're out of the military, you transition down and you're retiring, they're going to want to know that you're living there, your work is there, your spouse's work is there, whatever it may be. You're not going to go into this. Yes, it is a rental because you're renting a unit or units out, but you are living in one of those units. So that's what makes this a little bit more unique than just buying an investment property.
Right. And so when you buy one of these things, obviously it's going to be a temporary situation. Most people
Mhm.
are probably not planning on living in a multifamily for a long period of time. What are the limits, the upper and lower limits of how long you have to stay there and how quickly you have to move in to the units when you're buying with a VA loan?
So there isn't a limit on how long you have to stay there because, of course, with the VA, like you can move somewhere, you can get orders. I mean, it's happened to us where we haven't had a lot of notice, but you're
Right.
supposed to be moving into the home within the next 60 days. So I know sometimes clients will look and they're coming this way, but they know they're not going to move in. They're working on selling the home or they're waiting for, their
Mm.
time at their current command or where they are now to expire. But like I said, it's that intent your intent to live in the home and to occupy it as your primary.
Right. That makes perfect sense. I just wanted to clarify that because obviously you're doing house hacking because you want to use it as a rental, but there
Yeah.
are limitations to that, right? You do
Mhm.
have to intend to live in it and you can't buy it and then fill it up with renters and, wait to move in for a long period of time or something like that. So you do have to
Right.
be mindful that one of these has to be your primary residence. And you mentioned that there's no down payment, just like with a regular VA loan, which is super awesome and a great advantage to using VA loans in the first place. But are there any special requirements that you need or that are required by the VA when you're buying a duplex or a quadplex or anything like that?
So as far as the loan requirements, like you're still going to go through the process the same way. And like have had it before, there's still not a credit threshold that you have to reach. Although, of course, probably credit, higher credit candidates are going to be more qualified for this type of home. We still
Mm,
have to look at all the factors and see how it's laid out. They're still going to look at your current income. One thing that's different when you're looking at multifamily is that you have to have reserves. In some cases, depending on how many units and how much that debt to income ratio is, you may need to have 6 months of reserves. So that means
right.
6 months of the mortgage saved up. And that's just because, if you think about it from the bank's point of view, they're lending you this money. If you just have one home, something can go wrong, right? And it's hopefully not a catastrophic thing. But if you have two, three, four different units and you also have renters in there, that kind of increases that liability, so to speak, and the amount of things that can go wrong because, you don't know everything that's going on in those other units. So I would advise
Right.
people, just like with getting a regular single family home or townhome condo with your VA loan, start the process early so you can get a really good idea of what you would qualify for and how much money you would need to save. And that way you're better prepared when you're ready to start looking.
Yeah. Could you define reserves for some people? They might not understand exactly what you mean by having 6 months of reserves.
So if your mortgage payment is $3,000, then you would have to have 6 months of the mortgage payment saved up. So in that case, $18,000. It might not always be that much. So that's why I say, it could depend on the number of units that you're looking to buy. It could depend on the price of the home. It could depend on your current credit. But I'd just like to give people kind of that, I guess, worst case scenario, just so they know I do have to have some money saved if this is something that I want to do.
Yeah, that makes sense. 'Cause everything that you said is true about multifamilies. They're just a little bit more complicated. You're gonna
Hmm.
have it's built into the purchase that you're gonna have other people living there who are gonna be occupying, your house and, you know, doing whatever it is they do in there and, that you can't control really on that side of the house. So having reserves there not only makes sense, but it's gonna be a good idea. I mean, even when you're buying just a standard single family home, things are bound to happen, right? But when you buy a multifamily, you're becoming a landlord and a homeowner.
Right.
So you have even just a little bit more responsibility than you would even with just a single family home. And having reserves is going to be important because you're going to be responsible for certain things on the other side of the wall, that
Right.
your tenants
Exactly.
are in charge of. So I think that is a great point and something that really needs to be considered by people before they do this. So, what else you got for me? What else do we need to think about when using a VA loan to make a purchase like this?
So when you're looking to purchase a home, you're going to be able to use 75% of the prospective rent of every unit, whether it's an additional one unit, two or three units. So when we order your appraisal, the appraisal is a little bit more expensive. We get the value of the home because remember, the VA can only give you a loan for what the value of the home is or what they say the value of the home is. And they're also going to get basically rental comps for those units. So kind of going back to when you're starting to look for a home and you're starting the pre-approval process and you're meeting with a realtor, you want to be able to work with someone who kind of understands how this works and can maybe give you a better idea of what they think those units can rent for before the appraisal. Because your realtor could say, oh, yeah, easy, you can get 2000 for that unit. But
Mhm.
then if you don't already have a lease that's going to be in effect, we have to go by what the appraisal says. So it's a little bit more, I don't want to say tricky because really the equation is very straightforward, but it does mean that you need to work with someone who's doing their research and that you have a good handle on, even if they said the rent was going to be less, can I still qualify for the home? So you're qualifying for the whole mortgage, but they're taking into account what you could make, 75% of what you could make for the rent. If you move in, and I've actually had a buyer do this where they purchased the home and they already had a renter lined up. So we were able to use what was less between the rental comp and the prospective rent, 75% of that towards that, qualifying them for that mortgage.
Okay.
So it's it's it seems like a lot to think about, but I want people to understand the different factors because you usually can qualify for a bit more probably than you thought, depending on what the rental comps are. But you want to be aware that, you know, you you can't just pick an arbitrary number and say, well, we think that we can get this for the rent. Well, it only works if you have a lease or if you get that number from the appraiser.
Right. And you can't punch above your weight class either, right? You can't qualify for a home that you wouldn't normally be able to qualify just because you can rent out the units, right?
Well, it kind of depends. They take that rental income is going to be considered a qualifying income, just like if you had a co-borrower or you had a second stream of income or disability or things like that. So I've had buyers, for example, I had a client buy a duplex outside of Richmond, which they're also, pretty common out that way. It was a mother and a daughter. And the mother had really good credit. The daughter's credit wasn't as good. We were able to qualify them together, but she had a bulk of the income. Neither of them would have qualified on their own. But when we were able to put them together, and again, they were living in one side as a primary and they were renting out the other, we were able to qualify them based on that
Oh,
rent.
wow.
Yeah.
Okay.
They were currently living in the home. So they were able to actually use the rental comp from the person who was renting the other side of the duplex because they had more than a year left on their lease and they were able to
Yeah.
qualify. So for them, it was a perfect scenario. And I don't know if they would have been able to qualify for that same home as a single family home or a townhome or
Okay.
something because that is considered income. The reason they say 75% is because they don't know if you ever have a month where one of the units isn't rented out or, not all the units are
Right.
occupied at the same time. So that's just, it of course protects the bank, it protects the VA because they insure it, but it protects you as the home buyer. Like you said, you should have reserves, you should be prepared, and we're not going to qualify somebody for more than, what they would be able to handle.
Yeah. So potentially you could buy a multifamily house that if it was a single family, you might not normally be able to buy with this tactic.
Yeah. So you want to make sure that, you're still working on your credit. You want to have strong credit. You want to have savings. But as
Mhm.
long as we can get that, the rental comp to work with what you need to qualify for and the percentage you need for the mortgage, then yeah, potentially that's a reality for a lot of people right now. So it gives you a
Yeah,
huge
that is so cool.
advantage. Yeah.
Yeah. You mentioned something that I was going to point out earlier is when you're looking at buying a multifamily, whether it's a duplex, triplex, or quadplex, it probably already is that. It probably already is functioning as that.
Mhm.
So you may inherit tenants with
Yes.
already having a lease, or you may have a situation where you're buying it vacant, but they just recently had tenants in there. And so
Mhm.
your agent should be able to get those leases from
Mhm.
the seller of the unit, and you can use those to show the lender actual proof that what the real actual rent was. And in some cases, for tenants that have been there for a long time, landlords, especially private landlords, aren't always on top of raising the rents. And so
Right.
lots of times you'll see tenants that have been there for a long time and they're paying under market value for the rents. So to have an agent that is savvy in this type of strategy, you you may see that you have a lease in place at this tenant and maybe they're paying $500 a month or whatever. But your agent was like, "Well, actually, I can guarantee you that you can get $1,000 a month." They're
Yeah.
paying well below market rent, and then your agent will go out on the MLS, find comparable units and market rents, and then present it to the lender. Now, is that basically how it works?
Yes, exactly, and we'll get an idea for that, and then we'll see how it lays with, your debt to income ratio, what we're estimating the mortgage should be, and see your approvability based on that. And I think it's important to remember that in Virginia, we don't really have, like, rent control, right? So, you know,
Yeah.
the rent can sometimes be a little bit skewed. I mean, I find a lot of people that come here for a short time, and they wanna start the pre-approval process, and they end up buying themselves. But you're always gonna have those people that are coming in for those short periods of time. They're geo-batching, their family is back somewhere because 'cause they're only gonna be here for 6 months, and you have that opportunity to set that rent, hopefully fairly, but being able to
Well, yeah.
have the opportunity to look at what the market is doing in the area and depending on the location close to the base and those types of things. So there are a lot of advantages for people that are able to do this and get into doing this soon in their home buying process.
Yeah, and if I'm representing somebody who's doing this kind of purchase, I, of course, want them to get as much as they can for their rental unit or
Mhm.
unit, but the market will tell you how much you can get. And, you can swing for the fence maybe for a little bit, but rentals sit on the market just like anything else if they're not priced appropriately. So you can get a little excited sometimes if you find a similar comp that is a really high rent. But if you
Mhm.
really look at it, maybe it's super nice. Maybe it's in a prime location or something like that. So you need to really lean on your agent to tell you, look, like this is your realistic range. This is your high end for rent. This is probably what you might get if it doesn't do well or something like that. So you want to
Yeah.
have both realistic ideas of the spectrum of what you could possibly get for the unit and not get too excited.
Yeah. Well, and another thing that your agent can help you with, especially if you're looking to use your VA loan to buy these types of homes, is to look at, like you were talking about how a lot of them are older homes. They want to look at the condition of the home if it hasn't been redone. Everything that holds true for a VA appraiser holds true no matter what type of home that they're appraising. So they're going to be looking for safety issues. They're going to be looking for chips paint. They're going to be looking for rotted wood. They're going to be looking for staircases, even if it's like front steps, if it's above X number of feet off the ground or X number of steps. So
Yep.
again, there are a lot of things that you need to be talking to your agent about when you're interviewing your agent or interviewing agents to prevent yourself from like falling in love with this house and thinking, okay, I'm going to be able to rent this out right away. And then realizing that there are repairs that have to be done and
Yeah.
understanding that in this market, there are a lot of homes where they're sitting. And so the sellers are happy to do some repairs. But then there are some people who may be selling the home. And I'm sure as an agent, you can tell as soon as you walk in, this is the type of place where it's listed as like an investor special or it's listed as like as
Yes.
is or whatever. Those are not the types of places that we're going to be, talking about when using your VA loan. So you need it to be
Yeah.
structurally sound and to appear not so much updated, but you're not going to run into safety issues.
Yes. That's a great point because not only the age of the homes is skewed, as we saw, very heavily to the older side. Some of these duplexes were converted a long time ago and have been under the same owner for a long
Mhm.
time. And so they have traversed through many iterations of code. So
Yeah.
some of them may not be up to current code because they were converted so long ago and they've had tenants in there for a long time. And so they
Mhm.
really haven't been brought up to code, or there might be a lot of things in there that aren't, you know, current standard expectations for renters and stuff like that. So you're gonna each duplex, each multifamily is going to be a unique experience.
Yeah.
I very rarely see any that are the same. You might
Right.
have some similar types, like older colonial homes do tend to be duplexed, if that's a word, probably not. But to make it a verb, you might duplex a old colonial home in a certain way and you kind of see standard stuff. And then your 1960s brick ranches, they tend to be, divided up in certain ways. So you'll see certain models, but no two are the same because, like we said, most of them were single family homes that got
Yeah.
converted. And in the conversion process, decisions are made, some decisions are not made, and
Yeah.
things end up, and it'll be what it is. And so that's kind of the fun and the scary part of looking into these kind of things because you never know what you're going to get. But if you find a good one in a good location, it can be very, very profitable, not only to get a discount off of
Uh-huh.
your mortgage, but when you move on, then you'll have two rental units. And
Yeah.
one of the biggest strategies in real estate as far as acquiring rental units is getting as many rentable units under one roof as possible because then you're only dealing with a handful of major systems, but you're getting
Mhm.
multiple rental incomes out of those.
Yeah, and
So,
probably cheaper too than buying 2 or 3 separate homes, even if they're smaller or older homes, it's going to be total
yes.
price cheaper. And I'm glad you said that about people moving on and what happens after you leave the home. So you don't, I mean, if you want to sell, obviously you could sell. But if you were leaving the home, let's say military orders, you're separating, you have a new job, life changes, whatever, you're able to do that, right? And when you move forward to use it to purchasing your next home, whether you're using your VA loan again, which people do have funds left, depending on the size of their multi-unit to do that again, or you're using a different loan type, they're still going to qualify you the same way. They're going to look at your mortgage and they're going to offset your mortgage by however many rent, the rental units and the appropriate rent for each unit. So it doesn't mean that you will not, like, you're not going to be stuck in the house forever, I guess is what I'm trying to say. You have
Right.
that opportunity where that rent can offset the mortgage and you can still go on to use your current income, job income, whatever other income on there to purchase, your retirement home or your family home or whatever that next step is. So I do think it takes a unique person to do this only because you have to really be excited and wanting to be a landlord, and I know that you have some notes on that. But for the person who
Yeah.
wants to do this, I mean, it's not limiting. You're not going to be stuck there. And of course, you can, if it gets to a point where you have a lot of rentals, a lot of people get to the point where they start selling them, and that's fine too. And hopefully, you would have made some income from the rent in the meantime and got some equity on that home also.
Yeah. I mean, you're totally correct. It does take a certain type of person because some people don't want to be landlords at all. So this
Mhm,
purchase, obviously, that is built into the whole equation.
mhm,
Um, and one thing that you mentioned before about, having a rental that's under one roof, and we were talking about that just a bit ago. I want people to think, for those who are inclined to want to keep homes and be a landlord and accumulate rentals, the reason why multifamilies are so cost efficient is because if you have a duplex, everything is under one roof, one
mhm.
HVAC system, you know, it's got one exterior to maintain, all
Yeah,
those things. Whereas if you have two single family homes, now all of a sudden you have two roofs, two HVAC systems. You might in a large duplex have two HVAC systems, but you understand what I'm saying. You can
yeah,
limit the expenses greatly by putting everything under one roof, which is why quadplexes are really, really nice because you're getting 4 units, 3 if you're living in one, but eventually 4 units under one roof, under one HVAC system, one plumbing system, the whole
yeah,
9 yards, right? And which is why also they're a little bit rarer to find. People don't tend to sell these very often.
yeah.
When you get 'em, you hold on to them for a long time, maybe even pass them on to your kids because they're a little bit of a cash cow, you know,
Mhm.
something, like a triplex or a quadplex. So super exciting if you can acquire one of these things and really use it to your advantage with your home buying journey. And it can become a really integral part of your personal wealth and your security of your future.
Yeah, I mean, hey, listen, in the last rental we were in, which was not a multi-unit, we found out we were going to stay here. We actually asked the landlord if he'd be willing to sell the house to us because we're thinking there's stuff we could do. We're already in here, and that was at the point where home prices were significantly going up where we were staying. And he just point blank said, "No, this is part of my retirement plan." He owns several rentals, all close to where he lived. And you better believe the second we moved out, we saw it listed for rent $700 more than what we were paying. So, I mean, I'm not saying take advantage of people, but I want people to understand, this can be a very lucrative long-term gain for people, and
Yeah.
the initial cost is nothing because you're not putting money down. You're gonna have closing costs probably, but you're not putting money down.
Yeah.
And depending on the rental and what they see, for what you can get for the rent, you can make that back fairly quickly. So, just like you said, after the right person who really sees the whole picture and what they could benefit from that.
Yeah. Absolutely. I do have a few pro tip notes for people. Did you want to say anything else about the mortgages and how they work first before we move into the next segment here?
No, I think we covered the bulk of it. Just would encourage people to, if you think you want to do this, look into this quickly, just so you have an idea on how realistic it is for you and kind of what parameters you would have to stay within for pre approving. And of course, talk to Ryan if you're coming to Hampton Roads, you're looking for someone who understands how these units work and how unique they are to make sure you're prepared.
Yeah. Yeah. Absolutely. Couldn't agree more with all of that. So, pro tip category number one, we're going to talk a little bit about what to look for in the building itself. One of the biggest things that I can tell people to look for is, are the units individually metered? What do I
Hmm.
mean by that? The utilities. Are
Oh,
they
yeah.
separate or are they all under one roof? The water, the electricity. The electricity usually is not, but the water is a big deal because if it's all metered as one unit, say, let's just say duplex is the most common thing. That you have a duplex, but the whole house is metered as one house, just like you would a single family home. Well, how do you charge your tenant utilities?
Right.
Because his water is your water. And, if you're out on vacation, he or she are still
Hmm.
using water. And maybe, they know that it's not separately metered. So they just use as much hot water as they want. Right. So
Right.
that's something to consider. You ideally obviously want them metered so you can just charge them separate utilities. But there's other things you can do. You could charge them a flat rate or something like that. Just an average cost of a water
Hmm.
bill, and anything extra, you'll just have to eat, and hopefully your tenant doesn't abuse that privilege. Or you could set like some sort of cap, like it's a flat
Hmm.
rate unless it goes over a certain amount, then maybe you split the bill, anything above excess. So you can get creative with it, but by
Yeah.
far, you want your utilities to be separately metered if possible, and you can get them metered. If they aren't, there's cost to that, and that's something that you'll have to factor in if you get a multifamily that isn't, and you wanna convert it into a separately metered unit. We won't get into details of that, 'cause that's a whole different topic for another day. Other things that you wanna look for, parking and storage. A lot of these duplexes will have just one garage, and then somebody's gonna have to park on the street, right? Most of these old colonial homes don't even have the lot size for two garages, right?
Yeah.
So you're gonna want to take that into consideration. Storage is a factor too when you're dividing up a house, and maybe there's a shed in the backyard. Who gets to use the shed? That sort of thing. These are things that you're going to want to think about as well. Laundry room, same thing. You know, does the duplex, triplex, quadplex have its own individual laundry rooms for each unit? Or is somebody, going down to the laundromat? Most people don't like to do that. And
Yeah.
it's either you or your tenants, right? Unless you want to put a laundry room in that unit. So that's another thing that you want to keep an eye out, that just a common thing that, common
Yeah.
community thing that people are going to either want. Now, maybe you have a 500 square I mean, one bed, one bath, 500 square foot unit. There's no laundry, right? And they're just
Yeah.
going to have to go down to the laundromat. And that is what it is. That's going to be factored into the rent, right? But if
Right.
you
When I'm
are Go ahead. Sorry.
No, I was gonna say, and I would think that if someone is coming in a 1v1 and they're only gonna be here for a short period of time, that's also probably not on their priority list either. So if you're finding a place that's like close to the base or close to the shipyard or something, that person may be there for 6 months or a year.
Yeah.
And they're not really expecting to have a full kitchen or a full this or a full that, in their apartment.
That's also a great point. And another great pro tip is if you're renting out a very small unit that's attached to yours, you are going to have most likely very temporary tenants. And so you're going to have a lot of turnover and there's cost to that. And your point about them only taking in 75% of the rent, why that matters is, well, if you're going to be a landlord, you do need to set aside part of that rent into some sort of account for
Right.
expenditures.
Hmm.
Vacancies. When you have a lot of turnover, you're gonna probably have, 30 days or more of vacancy, as you try to fill that out. So that's something that also you wanna consider. And we already talked about conditions and loan approval, but
Hmm.
especially in older buildings, you wanna look out for that thing. There might be peeled paint. A lot of duplexes are separated up and down with side stairs going up to the upper unit. Those obviously have to be properly painted and up to code for safety reasons and all that stuff. So stuff like that, you're definitely going to want to have to look out for. And pro tip category number 2 is being a landlord and getting tenants. The first thing that a lot of people, especially young people with no families, think it'd be great to get a multifamily unit and just fill it with my friends. And it'll just be a great little commune that I got going on here and they pay me rent
Yes.
and we all hang out or whatever. Sounds like a great idea, except it's probably not. Okay, so
Yeah.
once
Oh,
you become the
yeah.
landlord, you're the boss all of a sudden, right? Friends take advantage of friends, right?
Hmm.
And that's just the reality of it. Friends go into hard times and they might be like, "Hey, bro, let me, take off $200 this month and I'll pay you back later." All of a sudden things get all mixed together and you're mixing
Hmm.
friendship with business. Not, in my opinion, the greatest idea.
Yeah, I think that kind of lends to what would you do it yourself? Would you have somebody help you manage it? And even if you are doing it yourself, you have to think about those things like you were talking about the utilities and what is your lease and how much notice do they have to give you? I mean, it does go into a different category of home ownership because there's a whole extra added element to it.
Yeah. So that is something that I don't advise. It can work out. Some people do it. And it's probably not a family falls in the same category too. I've heard some horror stories in my own family. I've heard some horror stories of family renting out units from other family members. Doesn't always end well. So not advised. The second thing that I want to say about this pro tip category is, do you want to be a undercover landlord or do you want to have everybody in your building know what's going on? Meaning that you're the landlord. You don't
Yes.
have to tell everyone that you're the landlord. You can just be another tenant and they won't bother you, right?
Yeah.
And you can work through a property management company. There's pros and cons of doing that. Obviously, it's going to cost you some money, but it allows you to be removed from the process too. And you don't have to worry about collecting rents, how you're going to do that, vetting
Yeah.
tenants and stuff like that. And you can just kind of hide in the background and just pretend like, oh, yeah, landlord's doing crazy things again, but it's
Yeah.
really,
That's probably what I would do just because I wouldn't wanna be the mad guy to tell somebody they were doing something wrong or
yep.
they didn't pay enough for, XYZ. It makes it easier because in some ways, depending on your personality, because,
Yeah.
you do have to make that commitment to upholding your lease, especially when you have more than one tenant, because it's kinda like the rules are the rules.
Yeah, absolutely. So if it was me, I'm with you. I would hire a property management company and remove myself from the process. Even if they knew that I was the owner, I would just be like, redirect it to my property manager,
Right.
because I mean, things happen, people fall behind, people have to get evicted. Do you really want to be putting yourself in the middle of that situation
Mhm.
if that situation does arise and they they know where you live because it's right next
Yeah.
door. You know,
Yeah,
so
exactly. And you want to also make sure that when you're doing something like a lease, even if you are renting to, I know a lot of people will rent to like somebody that's on the boat with them or somebody who works with them. They find out that there's people coming for training or whatnot. But you still have to make sure that the lease is sound, right? It has someone is overseeing to make sure that everything that's important and should be in there is in there. What happens if you're late on your rent? What happens if you don't pay your rent? And what are the legalities that, of course, can vary state by state if you do
yeah.
have to evict or something else happens.
Yeah. And that is my last pro tip of the episode is always, always, always use a written lease agreement. Sounds like common sense, but common sense isn't always so common. And I have heard of many situations where people are renting out units with a handshake and, a check under the door,
Yeah.
or some cash in an envelope slid under their door, once a month. Not a great way to do business, not a secure way to do business, and open
Mhm.
yourself up to all kinds of legal issues. You should have
Yeah.
a written agreement, even if you wrote it up yourself and you just gave it to you know, your lawyer, your real estate lawyer, your title company
Mhm.
who you used to purchase it, and they were like, "Yeah, okay. I mean, this is technically a binding agreement." Really what you should do is just ask your title company or your real estate agent to provide you with a official lease, through
Yes.
either through the MLS. We have leases that we have access to that are already, written up and approved, or we can point you to a great real estate attorney that we know that can provide you with that. But you want some sort of written agreement that protects you to at least
Yeah.
get paid,
Well,
so
I actually had this situation with a VA buyer that situations changed and they decided to stay in Hampton Roads, but buy a house in a different area, right? Because of different orders, things like that. At this time, he was living in the home. It was single family home. He did have 2 roommates, which was great. No formal lease agreement, no
yeah,
formal way of getting payment, right? Like if they're not getting a check or whatever. And so they're like zelling each other and they're whatever. And it's like,
yeah,
okay, but this month it was this and this month it was that. And you have no formal agreement. So if you want to keep this home, you have to have a formal lease. You have to have a set amount and it has to match what they're paying you because we obviously have your bank statements to qualify you for this new home. So
yeah.
it's not just to protect you now, it's to protect you if you want to move out of that home and then be able to continue to use that income so you can buy another house and get another mortgage.
Yeah, exactly. So that is super important. And we have all done crazy things in our lives. When I was in college, I just, I rented out rooms with no formal agreement from people all the time. But when you're making a serious purchase, like buying a multifamily unit that is not only a big purchase, but is, something like we said, it's securing your future. It's a very big financial commitment and a great source of income and wealth generation. And you don't want to just use it haphazardly, have
Right.
whoever crash, in your rooms and that kind of stuff. You want to make sure that, it's all clean and above board and you're protecting yourself and, providing, a legitimate service to people because you are
Hmm.
you are renting out, primary dwellings to people. So that's a serious thing as well. So well, that's all that I have to say about this topic. I mean, we've really dug deep into this topic. We had a ton of fun. I love this topic, like I said, and if this is something that you want to do, reach out to me or Deanna. Our contact information will be in the link below. Ask your questions, and we will see you around next time. Deanna, do you have anything else that you want to add before we sign off here?
No, I just appreciate the conversation. And I hope that for people that are figuring out if it's something that they want to do, it gives them a little bit of direction and, clarity on it.
Yes, absolutely. All right. Well, until next time, everyone, we will see you out there.
All right.
Bye.
See you later.